Stablecoins and tokenization among the top DeFi trends of 2025. And they're only expected to grow further, with analysts expecting both industries to reach the trillions in the next decade. While crypto adoption accelerated this year, investors dealt with extremely disappointing price action, especially the last few months. Most tokens, including the majors, could finish the year in negative territory. Anthony Georgiades joins us now, founder and general partner at Innovating Capital. Welcome back. So how will crypto increasingly function, you think, as financial infrastructure as we turn the page into 2026?
Definitely. So I think the biggest things to watch into 2026 is we're going to continue to see institutional adoption accelerate. You'll see ETF allocation, bigger corporate treasuries, and even bank service offerings that will continue to expand, assuming that a lot of the regulatory clarity holds. In addition to that, as you alluded to, stablecoins will begin to function as real financial rails. Expect to see deeper incorporation of regulatory stablecoins in traditional finance, payments, and treasury options, especially with clarity stemming from the Genius Act. The last thing I'd say is really market structure legislation. We're seeing a lot of bipartisan US legislation, and this is only going to further formalize the rule book for digital assets overall. This is what we kind of view as a tipping point for this institutional capital deployment overall.
Now, Anthony, despite the fact that we've had all of this regulatory progress that has been made, what's your best sense as to why the crypto majors and really the price action of those crypto majors have slumped the last 3 months the way they have?
Well, there's a few components to it, right? So if you look at the regulatory impact on crypto, regulation is more so moving from uncertainty to structure, as I alluded to with respect to the Genius Act passing earlier this year, as well as US regulators and Congress advancing legislation like the Clarity Act, which has codified registration and disclosure requirements for crypto markets. And this regulatory shift has taken hold globally. Stablecoins have become institutional plumbing, integrated into payments, cross-border settlement, and corporate balance sheets. This sets the way and the pavement for long-term institutional adoption. But to an extent, what we've seen is a little bit of, selling of the news. 2025, you saw over $150 billion in derivatives liquidations as leverage was just flushed straight out of the market. ETFs, which were a huge hot talking point early in the year, have swung from major inflows to really meaningful outflows. Bitcoin and ETH ETFs in particular saw billions in net redemptions, which obviously compounded this downward pressure on price. Simultaneously, if you look at futures, the open interest has tumbled significantly as a lot of the speculative positions have unwound. So price action has seemed to be more or less range bound, reflecting somewhat of a shift from leveraged speculative swings off the backing of this regulatory tailwind, but to more a balance between smart money and risk off flows, which goes back to the fact that crypto has and continues to behave to an extent as a risk on asset that's been very much correlated to the broader market and monetary policy.
Anthony, let's broaden this out a little bit. Talk to me about more of your expectations for 2026. Could be on the regulatory front, the institutional adoption front, or general price action, trends and catalysts on your radar.
Yeah, so looking at the institutional impact on crypto, it's obviously real and structural. These Bitcoin and Ethereum ETFs, albeit some of the net outflows recently, have become major capital movers, not just retail toys or tools. Institutional flows will continue to find their way into broader portfolio construction, and long-only investors in corporate treasuries are continuing to position strategically, not just through daily trading overall. Traditional banks, most banks you can think of, are evaluating crypto trading services for institutional clients, and this is signaling moving from exploration to hard-hitting integration. I also think we're going to see a lot of M&A in digital assets. We saw record volumes in 2025 as institutions continue to buy infrastructure and have really positioned themselves from a regulatory framework ahead of 2026. So I think 2026 is going to be a huge year in the framework of M&A as it pertains to digital assets. Institutional capital isn't just hyped at this point. It's becoming a strategic allocation in multi-asset portfolios.
Anthony Georgiades is the founder and general partner at Innovating Capital. Thanks a lot for taking the time to help us kick off this trading week, this holiday trading week on Wall Street. All the best for the new year. Anthony, thanks for being here as always. Good to see you.
Thank you. Great for having me.